Yeah, so the Fed is organized. So there's a central part of the Fed, which is the Board of Governors, and then there are regional Feds. And each of the regional Feds has a presidency, and then there's a rotation on the FOMC, which is the most important component. So the FOMC is the
Right.
key committee that makes the decisions on the rates.
Let me bring in my colleague, Damian Sassauer. Before Lau Brainerd, we have Cam Harvey of Fuqua.
Cam, does the whole Cook issue, does this really change things? Does this really change someone's outlook on the Fed, on their ability to act? I mean, what's the real world impact on what Trump is, basically proposing to do here?
Yeah, so it's pressure. So it's political pressure, and like in a way, what we really value
Yeah.
is an independent Fed. So I've got some recent research that asks the question, how important is it to be a reserve currency? And the US has got this privilege. So the people all over the world, central banks hold US dollars. They hold not just the cash, but treasury bonds. And that demand for the bonds actually reduces the yield. So it allows the US to have lower interest service cost on their debt. It allows the US to have leverage. So it is a privilege to actually have this. So one of the key components
Yep.
of having a reserve currency is to have an independent central bank. And that's being challenged right now.
So here, I just want to ask you on that, right? I mean, because I agree with you, the dollar's still the world's reserve currency. Its transactional dominance is unquestioned. But here's the deal: will some of these appointments, some of the things that Trump is doing here, will this give him greater access to what's going on inside the Fed, the ability to really impact at the grassroots level, the way people are speaking to one another, the way people are sharing data with one another? Is that really what we're talking about here?
So this is a very difficult issue because it could be that the Fed is making a serious mistake. And I, for the last couple of years, have criticized the Fed for keeping the Fed funds rate too high. And then now all of a sudden in DC, they've jumped on that bandwagon. So it is delicate, the balance and the pressure here and there to get them to think about this more carefully could be useful.
Cam Harvey with us, Duke University. We continue with Professor Harvey. We welcome all of you on an extraordinary Tuesday here in August. Damian Sassauer in for Paul Sweeney. I'm Tom Keene. Good morning across the nation. Good morning in the Carolinas. And of course on YouTube, subscribe to Bloomberg Podcast, our new digital experience. Really humbled by that excellence. Now, Damian Sassauer with Professor Harvey.
So, Cam, we know about the lag from monetary policy through to the real economy. Rate cuts just don't, have an impact on the everyday person overnight, right? So talk to us about, what if Trump gets out his wish and he gets 150 basis point cuts from the Fed before the end of the first quarter of next year? I mean, if that were to happen, would that have any real world impact immediately?
Oh, it would have a dramatic impact. So you're talking 150 basis points?
Yeah, sure.
That would be
bring it all forward.
Very dramatic. So more likely we'll have a few cuts. But there is a lag, but the lag is not as big as you might think. And any time you reduce rates, you reduce the cost of capital. And when the cost of capital is decreased, that means there should be increased business investment, and consumers will do things like buy a house that they were kind of waiting to do for the rates to come down. So I would say that if the rates did come down substantially, that could be a significant boost for economic growth, and potentially exactly at the right time where we're seeing a significant softening in the labor market.